We've compiled a list of trading advice from the world's greatest investors. In this video are tips you can use to secure your financial future. So take a pen and paper and take notes. It's top financial advice from world-class investors. Warren Buffett. Most people get interested in stocks when everyone else is. The time to get interested is when no one else is. You can't buy what is popular and do well. Investors should remember that excitement and expenses are their enemies. Charlie Munger. The big money is not in the buying and selling, but in the waiting. John Templeton. Invest at the point of maximum pessimism. To buy when others are desperately selling and sell what others are greedily buying requires the greatest fortitude and pays the greatest reward. Focus on value because most investors focus on outlooks and trends. Edward Lampert. This idea of anticipation is key to investing and to business generally. You can't wait for an opportunity to become obvious, you have to think. Here's what other people and companies have done under certain circumstances. Now, under these new circumstances, how is this management likely to behave? George Soros. It's not whether you're right or wrong, but how much money you make when you're right and how much you lose when you're wrong. Markets are constantly in a state of uncertainty and flux, and money is made by discounting the obvious and betting on the unexpected. Ray Dalio. To make money in the markets, you have to think independently and be humble. The biggest mistake investors make is to believe that what happened in the recent past is likely to persist. They assume that something that was a good investment in the recent past is still a good investment. Typically, high past returns simply imply that an asset has become more expensive and is a poorer, not better investment. For every mistake that you learn from, you will save thousands of similar mistakes in the future. So if you treat mistakes as learning opportunities that yield rapid improvements, you should be excited by them. But if you treat them as bad things, you will make yourself and others miserable, and you won't grow. Tudor Jones. The secret to being successful from a trading perspective is to have an indefatigable and undying and unquenchable thirst for information and knowledge. Don't be a hero, don't have an ego. Always question yourself and your ability. Don't ever feel that you are very good. The second you do, you are dead. Peter Lynch. The list of qualities an investor should have include patience, self-reliance, common sense, a tolerance for pain, open-mindedness, detachment, persistence, humility, flexibility, a willingness to do independent research, an equal willingness to admit mistakes, and the ability to ignore the general panic. Never invest in a company without understanding its finances. The biggest losses in stocks come from companies with poor balance sheets. Benjamin Graham. Though business conditions may change, corporations and securities may change, and financial institutions and regulations may change, human nature remains the same. Thus, the important and difficult part of sound investment, which hinges upon the investor's own temperament and attitude, is not much affected by the passing years. Successfully investing is about managing risk, not avoiding it. Bill Ackman. I'm not emotional about investments. Investing is something where you have to be purely rational and not let emotion affect your decision making, just the facts. Investing is a business where you can look very silly for a long period of time before you are proven right. In order to be successful, you have to make sure that being rejected doesn't bother you at all. John Paulson. Investors that do the best and have done the best are those that stay and compound at above average rates over the long term. Philip Fisher. The stock market is filled with individuals who know the price of everything but the value of nothing. Even in those earlier times, finding the really outstanding companies and staying with them through all the fluctuations of a gyrating market proved far more profitable to far more people than did the more colourful practice of trying to buy them cheap and sell them dear. C Bogle. The courage to press on regardless of whether we face calm seas or rough seas, and especially when the market storms howl around us, is the quintessential attribute of the successful investor. In the long run, investing is not about markets at all. Investing is about enjoying returns earned by businesses. Bill Gross. The market can move for irrational reasons, and you have to be prepared for that. You need to make big bets when the odds are in your favour, not big enough to ruin you, but big enough to make a difference. Icahn. Some people get rich studying artificial intelligence. Me, I make money studying natural stupidity. When most investors, including the pros, all agree on something, they're usually wrong. Michael Steinhardt. The hardest thing over the years has been having the courage to go against the dominant wisdom of the time and have a view that is at variance with the present consensus and bet that view. The hard part is that the investor must measure himself not by his own perceptions of his performance, but by the objective measure of the market. The market has its own reality. In an immediate emotional sense, the market is always right. So if you take a variant point of view, you will always be bombarded for some time by conventional wisdom as expressed by the market. We've now reached the end of this video. If you like what you saw, please press the like button and subscribe to this channel for more inspirational content.